Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. All right, everybody. Good morning. Welcome back to another live stream like you just saw there. If you're looking to get funded, check out DNA Funded. They are linked in the chat and in the description. Make sure to use that promo code A1T20 for that 20% off discount. Good morning, Celia, as well. So she's watching at work. Awesome. And Bulent, good to see you, my friend. Hey, Nick, man, that was incredible. I went into a gold trade as soon as the tariff drama message came, and boom. Yeah, big stuff here this morning. Potentially 50% tariffs on Europe, and that'll kickstart your day for a Friday. I got my coffee. Gonna need it today. Hope everybody is caffeinated and doing okay on this this Friday morning. So I got a lot of options today. What am I going to buy? That is my personal opinion. Could be dead wrong. Maybe I shouldn't buy a thing. You probably shouldn't place any trades today. But I'm looking to potentially buy some indices today. We did get some concerning news in regards to tariff drama, right? You can see the US dollar kind of all over the place here this morning. US dollar's been trending lower overall. Let me just, sorry, let me pull up, make sure everything is running okay. So what we'll do here is I'm going to go through some of the ideas that I'm looking at this morning. There is quite a few things to do. Lano FX, good to see you as well here. Appreciate you on being a channel member here. Sorry about your Dow trade, man. Trump will do it, huh? Well, yeah. So take a look. Here's my Dow trade, but I want to map this out because this is attempt one, right? So I am more than happy, or not happy, I guess, but perfectly fine with taking a stop on this trade. So let me show you what kind of took place. So I went long the Dow Jones. What was this, 2 days ago? So I went long Dow, and I had a stop below structure here. So I liked this setup. I thought most likely we're going to continue to grind higher, but unfortunately we had other plans, it seems. Markets are lower this morning with basically the negotiations between the U.S. Administration and the European Union on trade. There seems to be a disconnect, right? Trump unhappy about the way they're handling the negotiations so far, believes that they're not being reasonable, so on and so forth. So regardless, the point is uncertainty about the progression of how that trade deal will go had the market freak out. So I did take a stop on my Dow Jones trade this morning. But if I can show you something really quick, this is the importance in my view, or how I trade, right? I don't go all in. Like, I'm not like, okay, Dow Jones, I'm all in. I think it's going higher, right? I have an opinion, and I say this all the time on the stream. I made an educated guess. I still, by the way, I think indices are going to continue higher overall, but we're going to have some chop. We're going to have some false starts. And so I didn't go all in. I took a small long trade on the Dow Jones. Still a big size in terms of just because, I'm working with a good bit of capital. Still, I think I lost like 6K on this trade, right? Which is a lot of money. Don't get me wrong. I'm not saying to the contrary at all. It is a good bit of money, but on the account, it's not going to destroy anything. It's another trade. However, this was a small initial trade on the account. Again, I know it's a good bit of money, but on the account, it's a relatively small trade. And I highlighted when I took this trade that I'm more than happy to take a second or third attempt with slightly greater size if we get some deeper pullbacks. So I acknowledged when I wrote this post that this was an aggressive entry. This was a 4-hour chart pullback. Now I think what you're starting to see is we are seeing some deeper retracements on the daily chart. And I actually, depending on how the chart trades here today, I actually like these levels quite a bit more. This range right here, I like this quite a bit more than my initial entry. I'll tell you why. I believe that this is a 38.2% retracement, if I'm correct. Yep. See that? So this area is a 38.2% retracement area of support. So if price can come down a little bit further, I actually like this trade entry a whole lot better than my first attempt. Was my first attempt worth taking in my strategy? Yes, still worth taking, even if it didn't work out. So, and I'm giving you this example because a lot of traders, what they will do when they have a trade like this where it gets stopped out, they'll say, what did I do wrong? Why did I shouldn't have taken this trade because, this candle or we saw this or whatever. No, I stand by the trade that I took. It met my criteria for an entry. I took the trade and it didn't work out. That doesn't mean your system is broken, right? Not every single trade is going to be a winner. And until you can accept that, that will be a deterrent to becoming a profitable trader, right? So when we look at this, we can't say, well, you might, and again, I'm just telling you what I'm doing. You do what you want to do. But for me, I'm not looking at this and saying, oh my gosh, I should have considered this and I'm going to change what I'm doing next time. Like that's what gets you into the cycle of doom stuff, right? You want to talk about trader cycle of doom, or you're just running in circles with what you're doing. Quickest way to do that is to change what you're doing every other day or every time you experience a loss, right? So I took an attempt. It didn't work out. I like this area a lot more for a second attempt. But Nick, what if that level doesn't hold? Then we look for the third and we move on, right? The point is, I don't need to be right all the time to make money in the long term. I just need to stick to my system, take good risk to reward trades, align and make sure that they align with the fundamental analysis that I'm doing, the technical analysis that I'm doing. I'm managing risk appropriately, and I'm not freaking out when I take a stop loss, right? Abo, I appreciate this. This is a criticism that I sometimes get. People ask me, Nick, why don't you share specifically the risk per trade that you're taking? Why don't you say like I'm risking 1% of the account or anything like that? There's a couple reasons, but I'll give you the most important one is that, so I run a service, right? I run a service. This is the point blank reason that I don't do that. So I run a business where I share, we build software tools, and we also have a service where you can see the trades that I'm taking, right? So I have an attorney, and I asked them, what do you think about that? What do you think about me sharing? Like, what details? What's the best idea? And they said basically the danger of sharing every little specific detail of how much you're risking in a percentage form and giving out every single criteria. It's more likely that people are, you don't want to give people the ability. This is not a copy service. We never advertise it as like you copy, you plug in, you just copy every trade onto your own account. That's not what our service is. It's an educational service, right? So I'm sharing you the trades I'm taking and why I'm taking them. I'm not telling you every single detail about my personal finances and how much risk I'm taking and all that. Is that stuff useful and important? Sure. And I can give you general ideas, but I just don't clarify in every single trade. So I mention this frequently, right? So instead of, I usually risk between 0.1% and up to 3% of my account on a particular trade based on a criteria list that I look at. Like, for example, and I'll say this, right? So I won't give you necessarily a specific percentage because that's a personal decision in terms of, if someone's going to see a trade that I'm taking and they like that trade and they agree with it and they decide they want to take a trade, I leave a particular detail out. People sometimes accuse that of being like, oh, you're not fully sharing everything. But again, it's not a copy service. It's a service where you can see the trades that I'm taking, why I'm taking them. But what I'll generally do is I'll say, if it's a small position, right? If I'm talking about small position, it's closer to the bottom side of that range. And if I am taking a stronger attempt, it might be closer to the upper limits of that range. Does that make sense? I hope it does. Legal counsel is the short answer. Told me that it's best that I don't give out every single detail about, trades that I'm taking, intentionally, so that it's can't be even closely construed as financial advice, because it's not. And we say that with every single post, right? But people, unfortunately, are crazy out there, and the markets, are a very emotionally charged situation. And so we've taken precautions to protect ourselves when we share trades. Yeah, no problem. So indices are all kind of lower here this morning. NASDAQ is also looking really interesting. If we get a follow through move to the downside, right? That's going to be interesting. 20,400, 20,000. I like that area quite a bit for possible long side setups as well. We have of the three, the Dow Jones is down 1.5, NASDAQ's down 2%, Russell's down 2.2%, getting hit hard. I actually was looking at the Russell this morning as well, and the DAX. Both of those look interesting. Look at the Russell. Like, that's a sweet trade setup. Let me just check. Yeah, Russell's getting very bullish on the Edge Finder. The COT report does drop later today, so I'm curious to see what the indices look like. We'll get that this evening. So yeah, it's an indices day for me for sure. I'm also watching the DAX. I really do like the DAX setup as well. I'm probably going to take this trade today. US market opens up in 15 minutes. So I'd like to just watch the New York Open, see what how the dust settles, if you will. And then I'm probably looking at things like the DAX. I'm probably looking at the Dow again. May look at NASDAQ if we keep going lower. And I'm looking at the Russell. I've got a shopping list here today. Again, I'm saying that not like I'm going all in on these ideas, but I'm stepping into this pullback. I actually think there's an opportunity here for some continuation plays. Maybe I'm wrong. Check out Bitcoin retesting that previous all-time high. What do you guys think? I'm curious. Do you think, speaking of indices here, do you think indices are a buy or a sell right now? VIX is up 24%. I mean, to the credit of the bears, the VIX has a lot of room to expand higher. That could mean indices down for a little bit. Let's take a look at the put to call ratio. How are we looking on the put to call? You guys know that's one of my favorite timing tools, or one of my helpful timing tools. Yep. High put demand. People are getting scared again. Actually, this was from yesterday. So the people who bought puts yesterday, they're actually looking good now. But I wouldn't be surprised after today, you might get a put to call up in here, and that's going to start looking attractive to me. Some people think it's a sell. Hey, Nick, been a subscriber for about 2 weeks. Any particular reason you don't trade currencies? I trade them all the time. Currently, I have several currency trades open. They're not going super well. I've got a couple drawdowns that I'm dealing with right now on the currency front. They're small drawdowns, but drawdowns nonetheless. I'm long NZD JPY in a drawdown on this one. I'm long dollar yen Where's dollar yen? Yeah, look at dollar yen. Not so pretty today. Actually, I'm looking to potentially add another trade on dollar yen. If we get lower, I'm going to probably dollar cost average in a little bit more on dollar yen. I think that has longer term potential to rebound and make a move higher. I think we're at a long-term level of demand. I'm pretty long-term focused when it comes to FX. So I'm not like a day trader of FX or anything like that. I do longer term kind of position trading on currency pairs. Euro pound, I was looking for upside to short into that. Didn't quite get it. CAD Swiss, I'm still long on this one. Not going super well. So I do have several currencies. I'm interested in the pound dollar. This thing looks like such a beast. Anybody watching pound dollar? I put out a marker a market update on pound dollar yesterday. Let me see. Actually, no, it might have been. Yeah, here it is. I did a pound dollar breakdown in our Telegram channel, highlighting that I think we could be moving past these highs. And we did, right? We are now moving across those highs. Check that out. So we got a big break here to the upside on pound dollar. And without getting too far into the fundamentals, most of our economic data in the Edge Finder suggests strength for the British pound. It looks really promising to me. I think that there's more upside for the pound. We'll see if I'm correct. Time will prove either right or wrong on that, of course. But my educated guess, quote unquote, is I think pound dollar continues higher. So I'm looking for longs on pound dollar. If we get a retracement in the next couple days, watching for that. By the way, quick little update. If you'd like to see all the trades that I'm taking, I've got something cool for you. We're doing a free VIP giveaway this week and next week. If you are not a VIP member and you'd like to get notified anytime I take trades, so let me just show you, just so you know what you're entering. If you'd like to enter, here's how. Step one, join the Telegram channel, and then just click this link in there, right? So just join the Telegram channel. We share chart markups and bonus clips from the live stream all the time in here, so definitely worth joining. So that link is in the description. It's also in the live stream chat right now. So join the Telegram first, then enter for a chance to win a free VIP lifetime membership with us. Inside of the group, you get to see every trade that I'm taking. Indices, commodities, Forex, right? Whatever I'm trading, I trade a bunch of stuff. All of it is shared inside of our Discord channel. And if you would like to enter for a chance to win a free membership, simply join the live stream. Ball out, you know what you're doing. I saw your message. Is Alan coming on today? This is he's pranking me because he does this. He knows where he can find the live stream schedule, and every day just trolls us. Ball out, you're a funny guy. Actually, you know what? I appreciate when you do that, Ball Out, because it reminds me to tell people where they can find that information. If you ever want to know what our live stream lineup is, head over to a1trading.com, click A1 live stream, and this is our lineup. So actually, we've got a gap here. James Chandler, I'm not sure if we have anybody coming on. So yeah, I think Ball Out is. I think you might be right, OT. Dragon say it's worth joining. It's so much easier to get you guys' insight when I can't join the streams. Reading those little updates at work helps a lot. Yeah, I appreciate it. I really enjoy, like, one of the cool things about managing the Telegram channel is, like, when I put my thoughts into writing, it really helps me just to solidify what I'm thinking. And I make it concise so that people who are, I know you're busy, right? People are busy. We have these clips that the editors do a great job putting together, just a 1-minute clip on gold, if that's something you're interested in. So we're doing our best to make this the most helpful, live stream and Telegram channel completely for free on the internet. So if you appreciate what we're doing here, consider joining our Telegram, consider liking the stream. Cheers. Happy Friday. I hope everybody has a nice weekend too. I'm not going anywhere. I'm just saying, I hope you have a nice weekend. So I mentioned this earlier. Indices are kind of in focus for me today. I like the DAX quite a bit. I'm watching the DAX for pullback here to this 23,250 level or so. watching the DAX, watching the NAS, watching the S&P. These all look attractive to me for possible buy setups today. We've got the New York Open or stock market open in the next 10 minutes. We'll see how that plays out. You're getting some scary headlines. Oh my gosh, EU, US. But I'll tell you what, this is my opinion. As always, sometimes I sound like an idiot 2 days later when I give these types of opinions. So don't listen to me at all. But this is my thought on it. Okay, so indices are pulling back. I think people are they're picking up on the Trump playbook, right? The quote unquote art of the deal guy, right? Some speculate he didn't write the book. That's a fun rabbit hole to dig into. Or that he had someone else write the book and signed his name on it. I don't know. Anyways, I actually think that Trump knows what he's doing in terms of the negotiation process. He may be doing it in a way that a lot of people disagree, but what he seems to be doing is playing hardball, and then he comes back a little soft. Hardball, and he comes in soft. So with the EU stuff, right? There's a possibility that he's like, you're going to get 50% tariffs to really swing the bat on them, right? And then we'll come back later and they'll find a softening up compromise. Because if the EU sees, oh, we're getting 50% tariffs, that's your, that's the situation, then they may be more willing to like, okay, well, now we know he's serious. We've got to find something in the middle. So the point is, again, there's a lot of controversy. It's a highly charged subject, and it's way deeper than people think. Like the tariff stuff is like, put it this way, I've studied this stuff for 10 years. This is my everything in terms of like my focus and my study and my career path is to study what's happening in markets and to share my insights and thoughts on the internet, right? Well, here's the challenge. Even it doesn't matter how much you know about something, markets can still surprise you. For example, COVID shocked many. The rebound effect was way more sharp than people thought. But the other thing is, like with tariffs, right? We don't know the long-term ramifications of tariffs in the modern era. The last time we had really steep, aggressive tariffs, which some accuse of being like an isolationist tactic, was many decades ago in the United States. So we don't know. Maybe it's a positive. I'm not necessarily saying that as if like, oh, it's got to be bad. Like it might be a positive. We don't know. My point is, in the modern, very globalized era, that uncertainty scares markets because people just don't know. We don't know what the story is going to look like in 2 years' time. Even the smartest economists are divided on the long-term effects of tariffs. So what's the good news in all this? The good news is, as traders, we don't need to know all that. We don't need to predict all that, right? You don't need to be a PhD in economics to still trade what we're seeing. But what I'm seeing right now is the US economy is not in a dire strait, right? And let me give you this is why fundamentals, like why I love them so much, right? I mean, they move the market. They're what drive markets. That's important. But why I enjoy having a tool like this, and I know, I'm putting my sales pitch to the side because I promise that's not what I'm saying. There is a significant piece that comes with having the data in front of me where I can be like, okay, am I crazy? Or do I think that these pullbacks are buying opportunities? Well, we can look at that. We can say, okay, well, why would those be buying opportunities? Well, first of all, the outlook on the economy, you look at consumer sentiment reports, has been pretty negative. I think we had a better than expected one recently, but let me just check that. If I go to, I'm going to go to, where is it? We had consumer sentiment, didn't we? There it is, consumer confidence. So consumer confidence continues to kind of be waning, right? So people's forward expectations, the consumer seems to be spooked, right? People are feeling uncertain about the future. And you can see consumer confidence has been kind of falling in recent times. in fact, like here's the election, people got more optimistic, and then they've kind of sunk in recent times with all of the uncertainty surrounding tariffs. People think inflation is going to be bad. People think the economy is going to be bad. So when I can say to in response to that, okay, this is what people are like worrying about, but people worried massively. Do we go back as far as COVID? Can we look at this? Can we look at January 2020? We can, guys. So look at this. So here is look at what happened to consumer confidence. This is an indicator within the Edge Finder. You can pull up consumer confidence if you have a copy. So look at this. Prior to COVID, here's consumer confidence up in the 120s, dropped to the 80s, like real quick when the world shut down, right? And then it just kind of chopped around, stayed pretty negative for some time, and then it bounced back up in 2021. This was the meme stocks and crypto era. And then what happened? Well, it kind of just normalized. And now recently we started a little bit of a decline in consumer confidence. And the reason I'm showing you that is that this horrible consumer confidence actually preceded a huge move higher in the stock market. So when everybody got scared, it actually was a great indicator of bullishness in the markets. That happened again when we saw the put to call ratio skyrocket. People bought puts like crazy early in April due to the whole Liberation Day. Oh my gosh, it's all going to end. And you know what else we saw? We saw people on the AAII Investor Sentiment Survey. I know regular viewers know I've beaten this dead horse many times. Look at what we got in consumer in the sentiment survey. 36%. People went from uber terrified, super terrified, stock market's going to crash, economy's going to crash, recession, all this, to then it's not so bad after all. See how that sentiment was just dead wrong? That was dead wrong. People in April were panicking when the market was actually at a wonderful, longer term, in my opinion, opportunity to buy the market. Now you might be saying, well, Nick, you're speaking with hindsight. Well, humbly I say, I know it doesn't sound humble, but go back and watch the live streams and videos and listen to what I said during that time. I said exactly what I'm saying right now. Everyone's panicking. The risk to reward in the stock market looks really good. And it was. You know, we've rallied back. Several of the names that I own in the stock market world have done phenomenally well. We are off of the lows in the S&P 500. Even with this pullback, we're still up 20% from the lows. That's crazy. But you're going to get hiccups. That's the theme of Trump. Love him or hate him, the dude is super volatile. The dude will come out swinging all of a sudden on something and sometimes say things that most people probably feel are uncomfortable to be saying. But he's not, you know, he's a guy that is going to speak his mind, love him or hate him. And that causes the markets to freak out at times. It causes the market to also, you know, get excited at times. But that's going to be the world that we're living in. I said this when we were doing back in November of 2024, we were doing the streams. I said, okay, if Trump's the president, your playbook needs to adjust slightly to account for that because he's different than a Biden. Again, I'm not getting political with that. I'm just saying he's a different guy. He's less, you know, Biden is a more predictable type of president than Trump. I don't think, again, whether you like or dislike him, I think most people would probably agree with that. You know, just his nature of kind of going heavy on whatever he's doing. And so that's going to be the environment I think that you're going to be in for the next couple of years. You're going to be in this market where sometimes things just drop in the morning and all of a sudden you're back in kind of a chaos mode. And then other times you're back in euphoria and chaos and euphoria. And I think that with the right tools and understanding, traders will be able to benefit from all that. If you know what you're doing, you stay level-headed and you stay focused on the data, I think there's a golden era of trading ahead of us. This is my personal opinion. This year, I've had a pretty good trading year. Not my best ever by any means, but I've had a pretty good trading year. I caught a lot of this bounce back in the stock market. I was long gold during the first part of the year. So far, I've had a pretty good year, knock on wood. So yeah. But how have I been doing okay in all this? Well, the data, like staying true to the edge finder, keeping an eye on the top setups algorithm, keeping an eye on the economic reports, just filtering out a little bit of the news media like headlines, right? That stuff is they're not necessarily in your best interest to give you objective news. It's their best interest to get you to click and freak out about something so that you read their articles, so that you watch their stations, so that you donate to their campaigns, etc. Right? And that's both sides. That is Fox News and CNBC or CNN, whatever. But my only comment about the Edge Finder, I'm mentioning it because it was brought to my attention, is that the heat map data is delayed by 15 to 20 hours. I think the sync there could be a bit stronger. When the heat map, are you talking about this one? This one should be updating every 15 minutes. But I can definitely look into that. Heat map is the most important core element of the Edge Finder. If you're talking about the top setups page, that's another heat map, or maybe you're talking about the economic heat map. We have a couple heat maps now that I'm thinking about it. This is updating. Most of these reports update on an hourly timer. Nick, how much did you lose on the US 30 trade? I lost a wonderful 6.5. I haven't looked at it, but I think it was $6,500 on that trade. Just a casual Friday morning. No, I'm watching the Dow. I'm actually, watching a couple indices this morning. Look at the S&P 500. I think that's starting to look attractive. U.S. stock market just opened up. Take a look here. Look at this, a little bit of a bounce back here. NASDAQ also bouncing back. I'm going to watch to see how things settle this morning. I'm also watching the DAX. We tagged a level support. If we go back and test that low, I'm probably going to look to get into that. I also like the Russell. I think the Russell looks attractive here today. I'm also really curious to see in terms of the commitment of traders data that comes out later. I'm very curious to see how that shapes up. I'm checking out the Russell here this morning. I do like the Russell quite a bit. I do think I've been early to this idea several times before, but I do think that there's a potential catch-up trade forming for the Russell, which has been, a really famous last words for the last few years. The Russell has significantly underperformed the NASDAQ, the S&P 500. These things have done far better. S&P 500 is at a level that I really like. You've got 5,800 being tested. I like 5,700 more, but I do like this 5,800. So DAX looks attractive. S&P looks attractive. Russell looks attractive. Those are probably where I'm most interested in taking positions. The DAX definitely got hit hard, of course, with the concerns about, trade dynamics between Europe and the US. Here's S&P 500 ETF down 1%. The CFD is down 1.1%. Their closing hours are slightly different. So they do sometimes, they move the same percentage overall, but they have sometimes slightly different intraday open close ranges. Take a look at the VIX. Jumped up at one point. It was up like 20 something percent today, falling back here a little bit this morning. Gold's testing the upper limit of this range that we've been watching here. So check this out. We've got potential breakout forming here. We'll see. I actually, so you got the gold pop here this morning, obviously off of the uncertainty around trade dynamic stuff that took place, ran up into this resistance area. This is this might be kind of a big picture bull flag or whatever you'd like to call this. I don't really, care too much for the exact technical. You've got kind of this downward channel, but it's in the context of a longer term uptrend. Gold beautifully ended up holding this level, 31.25 or so. Previous resistance became support. Pinpoint, perfect rejection. I'm not long, so I'm not saying I played that perfectly by any means, but I am pretty impressed by the way essentially price was able to just tag that trend line, tag that support. I mean, this is just a beautiful technical reversal off of this level. Gold looks like, in my opinion, it is going to likely retest those highs, especially with a new catalyst of the EU and US kind of head to head a little bit, with negotiations potentially souring slightly. But your short-term kind of level of resistance that we're at, we'll be very curious to see how we react to this point, right? So you've got this downward trend line here that we're testing at this moment. If you get kind of a breakaway today, that could be kind of an intraday move today. That's a possibility. It's a pretty aggressive move, but it's possible to occur. But I don't have a bullish bias on gold. I know from a technical basis, I've just outlined that it looks like a really strong chart, but I don't have the confirmation at this time from the edge finder. The economic data significantly kind of does not help the case for gold. Specifically, I'm talking about the US economic data. Let me show you. So we're just very in the middle with our US surprise meter. What that's showing you is that when we look at the US dollar impact chart for all of our major economic data that the edge finder tracks, all this is telling you is that we're getting a really mixed report of data. So if we take a look at non-farm payroll, NFP, came in better than what analysts forecasted. That's bullish for the dollar. Jobless claims this week were also slightly better than expected. That should be bullish for the dollar too. But what's not so bullish for the dollar? Inflation came in soft, right? PPI, CPI, these numbers came in soft compared to their forecasts, right? Services PM. So why is that bearish for the dollar? Really quick, for the newbies on the fundamental side, we're glad that you're here, and we respect all levels of fundamental analysis around here. Long story short, the Fed wants to cut interest rates to make borrowing cost more accessible to themselves for the national debt and also for businesses and consumers. To cut interest rates, they want to see that inflation is down. Why would they need to see that? Well, because if inflation is high and you cut interest rates into that and make it so everybody can go out and borrow money really easily, inflation goes crazy, right? Imagine if prices are already going up and then you say, okay, everyone can now borrow money super cheap. What's going to happen to prices? Boom, we're going to rip. So the Fed does not want to cut interest rates if inflation is high, but they will cut interest rates if prices are doing more normal things. They may cut interest rates, right? But here's the thing. Interest rates may get cut. What does that do to the dollar? It's bearish. The dollar is more strong if they're not cutting rates or if they're hiking interest rates higher. That makes the existing supply of money more valuable. It makes debt, lending debt more profitable and borrowing debt more expensive, right? So that's why we want to understand these things. Those are forces at play in the markets at this time. So the US dollar looks really mixed. And so when I look at gold, if I just said, hey, I think the dollar is kind of a mixed outlook, what does that tell me about gold which typically, not always, but often enough, moves somewhat inversely correlated to the US dollar. Well, if I think that the US dollar is mixed, it would make sense that in most scenarios, I also think gold would be mixed. If I thought the dollar was going to be very strong, my bias on gold would likely be more negative. If I thought that the dollar was going to weaken, then I would think gold should rise. Was that helpful? If it was, if that made sense, give me a 1 or a yes in the chat really quick, just to let me know that that actually resonated. I know interest rates and inflation, all that stuff can be very confusing to new traders. Also, James or Chandler, one of you guys, if you could send me a message. Do we have somebody? I haven't checked. The schedule was missing someone at 9:45 earlier, but if you could just let me know. Okay. Kenzo's coming on. Okay, thank you. Appreciate you. I found it. Thank you for updating that. Okay, so we'll have Kenzo joining the call here in just a moment. Bitcoin pulled back here a little bit, back to 109, hit a high of 112, I think. Did it hit 112? Really close to 112. Not always, Nick. Sometimes it goes opposite. Yes, that's correct. The US dollar and gold do not move always inversely correlated. Specifically, a time that gold and dollar typically move higher, barring the current environment. Sometimes you get strong risk on moves, but sometimes you get strong risk off moves. When you get strong risk off moves, historically, when we're not worried about the US and trade deals, a lot of times the US dollar and gold can actually both move higher as safe havens. There are some nuances to this. And this is why, guys, trading does take time. Especially if you're going to be a fundamentalist, I'm not going to lie to you. There's a lot of learning that you're going to have to do. And I hope that my content helps you, but there's no shortcut, there's no cheat code to understanding the markets fully. I'm still learning, right? I'm going to be learning for my entire life if I keep on this path. I don't have any other plans, but the markets are a complex thing to understand. There are times where the US dollar and gold can both move higher. They can move lower together. It's not a perfect inverse correlation, but it's a generally observable one. Most environments, dollar down, gold up, dollar up, gold down. So NASDAQ coming down a little bit more here. So tried to pop this morning, giving back a little bit of gains. Like I said, I'm going to see if the dust settles on some ideas that I have. I do like the indices long. I'm watching Russell from a long side perspective. I actually really like the Russell. I think this might be a trade that I take today. Inflation coming down also really helps the Russell because that could increase the probabilities of rate cuts. I also see the Russell as an attractive option because of the onshoring and domestic stuff that the Trump administration wants to do. The Russell's a lot more small companies that are more focused domestically. So I do like the Russell quite a bit. And I think that probably is a trade that I will place today. Russell COT report comes out today. I'm very curious to see what they did with the Russell. Did institutions do a little bit of Russell buying? So on and so forth. Yeah, Russell's probably a trade for me. In fact, I'm going to pull that up, see if I can see what we're looking at. Okay, so I am actually going to get long the Russell, guys. We're 15 minutes after the bell. So just bear with me as I prep for that. I actually I know this, this is the lame thing to hear, but I don't love taking trades live on stream simply because I have to kind of completely pause what I'm talking about in order to do it. But I see the trade. I like the trade. I'm going to get long the Russell. So we've got Kenzo here in the back. What we'll do now, guys, we're going to take just a quick break. And then we're going to bring Kenzo into the conversation. So bear with me. Give me just a moment. I'm going to place this trade here, and then we will be bringing on Kenzo in just a second. Stay tuned. Coming in just after this. We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Weebull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Weebull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show. All right, guys, we are back with Kenzo. Hey, Kenzo, how are you?
I'm doing great. Thanks, and you, man?
I'm doing well. Kenzo, I'm placing a trade as we speak. I'm getting long the Russell. If you don't mind, I'm just going to punch in this order really quick. If you could just share us your ideas on the NASDAQ. I'll leave this chart up, and if I'm sorry, I'm not being a good host, but I've got to place this trade really quick.
No, that's fine. I think at the moment we had a very great run on NASDAQ because we thought maybe we'll be done with tariffs and stuff like that. But Trump actually repeated the same thing again. So this time on European Union, I think he's threatening to place, I think, 50% starting from next month. I don't know if they did not really reach a point where maybe European Union will try to negotiate, maybe. But to me, I think it's something that we can say we're used to this. I think maybe around those times or before, maybe they will have a meeting or negotiating whatever. At the end of the day, maybe the percentage will go a little bit lower.
Yeah, I wonder too. I was thinking about this earlier. When it comes to the dynamic with Trump, do you think the market is potentially figuring out the game plan here? Is there a pattern in your eyes that Trump takes kind of this aggressive stance in order to get the negotiation attention, if you will, and then he's a little bit more willing to compromise than he initially lets on? Do you think that's the play here? Like, is he hardballing Europe so that they then can make a deal? Because I don't think, obviously, like, he wants to make deals, right? Do you think this is, and we've seen that kind of be a repeated pattern. Do you think that's what's happening here?
Yes, the problem is most likely they don't change those tariffs before they take effect. Firstly, they take effect, then maybe a week later they say, okay, we reached a deal. So which means for that week or for the first of that month or for those 2 weeks, everything that will be coming in that country or those exports and imports, they will be charged extra. So which means even though we know that, yeah, it won't stay like that forever, but the thing is for that period, there will be some stocks or goods which will be 50% extra or on those tariffs. So it's like we know, it's like when we say let's prepare for winter or for summer, we know that it's not going to stay there for forever. We just prepare for now or for that season. Then when it's done, we just continue with our lives. So it's just like that. We know that it's not going to be there, but the panic is still going to be there because those goods, they're going to feel that. Those companies, they're going to feel those tariffs, even though it might be short-lived. But the thing is, European Union, they also a bit aggressive. So it's a different thing. I don't know how long will they try to drag that, but they are much aggressive as I saw their communication and stuff like that.
Sure. Yeah, and I guess when it comes to the indices, so so let me just give you a little bit of an update on my trade that I just placed. I appreciate you taking the lead for a second there. So with the
Mm,
Russell, these are smaller cap companies, and it's an index that I like to trade quite a bit because the
mm,
Russell, here's the thing, right? So the Russell is more smaller companies. I know, Kenzo, we've
mm,
talked a lot about companies like Apple, right? These ginormous international companies, and then Amazon, right? This is in all corners of the globe. Amazon is a
mm.
US company, but it might as well be an international global company. I mean, it is a ginormous entity. The
Yes.
Russell is a collection of mostly or more heavily focused domestic U.S. companies.
Mm,
These are smaller businesses. It's the Russell 2000, so it's an index of many companies that are much smaller than the major ones that we all know, like Microsoft. A lot of these companies,
mm.
most of us have never heard about. But the reason I like
Exactly.
that index is because of a couple reasons. Number one, they're very sensitive to interest rates. And I do tend to think that interest rates are going to come down this year. I think that inflation is making progress. I think that, if the dust settles on the tariff stuff, which obviously is not a great look today, we heard from the Fed Waller, which is a member of the committee. The Waller mentioned that if there is some resolution on the tariff side, there's a good chance that rates can come down this year because that will offset some of the concerns that the Fed committee has. The reason I'm pointing that out is that the Russell 2000 index, small companies, all companies want to see interest rate,
Mm,
right? That's good for borrowing costs for businesses, for consumers. It stimulates the economy. Stocks always want, and politicians also always want rates to come down. Uh,
mm,
but I think that they do have the potential to come down this year. We have oil prices uh, still low, right? We have the 10-year is kind of chopping back and forth. But I think if you get any sort of softening in the data, it could lead to a sharp drop in the 10-year. And I also
mm.
tend to think that inflation continues to trend lower. We've seen that in some of the data here recently. So I'm wondering your thoughts. Do you think because again, when I say I'm long the Russell, right, which is a very sensitive to inflation, sensitive to interest rates decision. Now, if I'm right about that, I could do
Mm,
really well with this trade. But obviously, if I'm wrong, I could get more punished than the other indices. This morning, look at how aggressive the way this thing moves. This thing was down 2.2% just a
wow.
few minutes ago. Now it's uh, only down about 0.9, but very volatile, similar to the Nasdaq. I'm curious when it comes to your perspective. Do you like the Nasdaq, the Dow Jones, the S&P 500? Which one do you think has the most potential upside?
Yeah, I can say starting with Russell 2000. I think
Mhm.
that one, if we look for, let's say, maybe 6 months, 8 months from now, yes, that will actually move very nice. Especially when the data is also softening, which means we expect rate cuts, even though they don't specify now. But slowly we start to see that the data is actually allowing us to have that confidence to say, yeah, there is a chance of those rate cuts.
Hmm.
So on the US 30, or let's say indices, yeah, this one is quite difficult. But if you still remember before, I said I will stick around with US 30,
Hmm.
trying to avoid this crazy volatility that we get from Nasdaq, S&P 500, and that, because this tariff topic seems like it's gonna stay with
Hmm.
us for this year actually, because 90 days after that 90 days they're going to negotiate again, and I don't think they will just agree at the same time, so which means the year will be going to an end, so which means US 30, even though we see some reversals here and there, I also took a loss. I think it's today, early today,
Hmm.
on US 30. I still believe that the volatility is not really aggressive as Nasdaq and S&P 500. To me, I think that is the stability that I want, not those crazy moves. But those crazy moves, if you are on the right side, sometimes they are good. But yeah, I don't. It's not really sustainable. You see.
That's a good point, and to your point about that, Kenzo, is take a look of the major three indices, not considering the
Mm,
Russell for a second. Dow Jones is down the least of the group. Now, obviously,
mm,
on the upside, if the whole market's rallying, typically, not always, but in recent years, the Nasdaq typically leads higher and leads
mm,
down as well. When it's all dropping, the Nasdaq kind of takes the biggest hit. When it's rising, it takes the biggest rise.
mm,
So yeah, no, I tend to agree that some of the more value centric names, I think have the potential to do just fine in all of this, and that technology stocks are at the highest risk. I mean, let's take a look at an ETF really quick. This is the semiconductor ETF, SMH. This is NVIDIA, AMD, Qualcomm,
mm,
Broadcom, all these chip makers. The reason I bring this up is that this is a very, very volatile subsect of the index that is really focused
mm.
on, the chip producers, Taiwan Semiconductor, like all these really high volatility stocks. Take a look at this rally. That is a
Whoa,
46%
45.
rally in just a short period of time. But granted, you pay for that with the very sharp drawdowns. That's a 37% move down. So
Mm,
you can really pick where you want to be. But as you pointed out, the nice thing about the Dow Jones is that typically, the NASDAQ saw a 26% drawdown or so. The Dow Jones
mm.
only saw about an 18%. So it can be nice on the downside if you see more tariff drama. Question for you with gold, Kenzo. Are you bullish on gold? Are you bearish? Neutral? What do you think on this one?
I'm very bullish at the moment. I've been following Russia-Ukraine tensions and stuff like that, and also the negotiations that they're trying to do. I can see that they're still delaying them, and that it's actually good for gold.
Mm-hmm.
And this all smaller tensions that we see all over the world, they actually feel good. But the one that we have with Russia, I think that it's something that it's still pushing gold to go a little bit higher. Few
Mm-hmm.
days ago, I think it's last week or last of last week, there was this nice conversation that Russia and Ukraine they're now going to meet direct without maybe the US or other counterparts. We started to see gold struggling. And after that, we started to see the delays, and now it's going back again. So as long as there is those tensions, I will still be bullish on gold.
Yeah, I think it's when we went into this year, Kenzo, I was pretty neutral on gold, but then at some point I got very bullish, and I actually was able to catch this move here, which was great. Since then,
Mm,
I took another trade. I got stopped out on an idea, and then I just haven't traded it since. I'm very curious to
mm,
see if gold is going to rally back up to these levels. I think based on what you just said, I think we probably agree that in order to get us up into the 3,500 territory, we would need to see
mm,
some escalation of what's been happening in the world. Like, for example, Russia denies willingness to speak further with Ukraine, or
mm,
maybe something happens in the Middle East, or something happens in China and Taiwan, or any of these possible catalysts. And I think gold is telling you that the world has been kind of, for some time,
mm,
increasingly worried about many circumstances. So we'll see if that
mm,
materializes in any way. But yeah, I mean, when it comes to trade war, that's been a huge catalyst here to the upside. And with today's news, the EU and the US clearly having a little bit of a disagreement in terms of how the trade negotiations are happening, with that 90-day
mm.
pause eventually going to come to a close, I believe in July. Yeah, it introduces some uncertainty that it may be sticking around with us.
Yes, and plus, beside geopolitics, we also have the possibility of rates cuts, which means the dollar will lose some strength, and
Mhm.
that will also give gold to also continue with the uptrend. But as long as we have this going simultaneously, geopolitics and also rates cuts, that will be a nice fuel. But if maybe geopolitics or tensions start to cool off, I
Mhm.
think one way or another, gold will have no choice also to sell off, even though maybe the rates will be lower,
Sure.
because I think it's overbought, but the situation allows it to still push to the higher side. as we see the tensions.
Yeah, and I think again, a lot of people are also just looking for an alternative, right? People are looking for an alternative to traditional stocks, bonds, especially the US denominated stuff. It's like, okay, if I don't want to be, if I don't want to be attached to the United States so much, then where else can I go? And I think that brings up another topic, Kenzo. We have gold, obviously, an easy answer in that, but also Bitcoin. Bitcoin is back past the all-time highs. Are you trading, holding, watching Bitcoin, cautious on it? What do you think?
Yeah, I'm trying to. I did check it. It was like seriously flying, I think, since yesterday.
Yeah.
So yeah, at the moment I don't really have. I bought some other ones, the smaller ones, which unfortunately they don't really perform very well. Like Doge, they do
Mm,
perform very well, but not that much. Also XRP, I think it's a Ripple or Ethereum. I mean, it's a
mhm,
Ripple, and the other one. So they don't really move nicely as Bitcoin, but this type of moves, they just happen once in a while
mm,
and it stops. Like Bitcoin, that's what it does. It moves maybe for a very nice week, then after that it will just consolidate.
mm.
But I like the fact that I think it's going to push other ones, the smaller ones, to head in the same direction. I think that will be great, by the way.
What I've noticed so frequently on Bitcoin specifically, Kenzo, is that when we do get these big moves, the pullbacks are so minor. Like, notice
Mm,
how when Bitcoin is really making its move, it typically does something like this. It shoots up, as you just pointed out, consolidates, doesn't really pull
mm,
back a lot. It just shoots up, consolidates, shoots up, consolidates, shoots up, consolidates, shoots up, consolidates. Are we going to shoot up
mm,
again? I mean, that's an interesting pattern because it's sort of recognizable in all the big moves of Bitcoin. When Bitcoin really makes its aggressive moves, everybody who's like, "Oh, I'm waiting for a pullback," rarely gets an opportunity to get one, right? So it's really
mm,
interesting how that, and then of course the other side that can be more frustrating is that can also go into very long phases of
mm,
consolidation and grinding lower, right? That would, imagine if you had bought into the hype around 73,000, and we can take a look here and say 180 days later, you're down 26%. Market's at
mm.
53,000. So it's not an easy thing to trade. I don't know that Bitcoin is. I wouldn't consider it to be an easy thing to trade. Uh, I don't know about
Mm.
you. Do you trade Bitcoin, or do you mostly just hold smaller coins or Bitcoin too?
Actually, I never traded like active trading. I just bought and hold few coins here and there. But these days, it's tough to just buy Bitcoin because it's quite expensive.
Hmm.
So holding smaller portions, to me, it's a different story. So I rather buy the smaller ones. At least I can hold a lot of them.
Yeah, that's a good point. Like, if you're going to be in crypto, you might as well be in the. But then the challenge with it is, as you pointed out, is like recently we've not even seen anywhere near the participation from the smaller coins. I would have thought that if Bitcoin was crossing 100K, we would have seen many other, really incredible rallies. I know we've had, like, what is it, Poly? Like, I know so little about crypto in general, but Solana, I think, is like another one that's done really well. But yeah, I mean, it kind of seems to change each season. I mean, take a look at Ethereum.
Mm.
Ethereum has done terrible, absolutely horrible compared to Bitcoin. But then you have some other new ones that have popped up, but Bitcoin seems to be the one that kind of sticks through it all and is consistently like a crowd favorite. So just kind of
Yeah,
interesting.
I think.
Yeah.
Yeah, I think gold, Bitcoin to me it's similar to gold,
Mm,
or let's say metals. It's crypto or versus metals. So on the metal side, we can say gold it is the one, but we still have copper, we still have silver and platinum and the other ones, which they don't really perform, or they will never outperform gold.
mhm, mhm.
So even on the crypto side, Bitcoin, if maybe you missed Bitcoin at the lower stages, yeah, you can still buy potions or whatever. but still you can still have the alternatives, which they don't perform very nice, but it's better to hold like 10 of them, 100 of them,
Mhm.
unlike maybe buying only 0.0 what percent of
Yeah.
Bitcoin. You see.
It's really interesting because actually you made I really like your point about metals, because when we take a look at gold, pull up a weekly
Mm.
chart, this thing has been a monster for, oh, I don't know, 5,000 years. Like this thing has been a powerful investment. Well, maybe not
Mm.
investment, but a security of wealth if you just bought and held it during all that time. Uh,
Yes.
However, take a look at like copper, for example. Like let's compare that chart to copper. Copper also has done well over time. And if you bought copper at $2, right? And then now it's at, almost five. Like, yeah, you've done well, like you've returned, but it's not the same as
Mm.
gold. However, there are seasons. There are seasons of massive, massive relative performance for copper,
Mm.
where in just over a year it returned 133%. There's times where silver has had massive runs. In 2020, silver was an absolute beast. And then it consolidated and has since really not been very impressive compared to gold. Here's silver, here's
Exactly.
gold, right? Look how different that is. So it is a good point. When you're looking at cryptocurrencies, there might be times where a Solana or an Ethereum or these vessels have explosive, amazing moves. And then the big picture is that the Bitcoin of the world
Mm.
seems to, at least for now, based on, with hindsight in our favor, it seems to be the one that does consistently the best over the longer term. You know, Even you could include in that same dynamic stocks, right? Stocks have incredible moments. Like take a look at Tesla, for example. Tesla
Mm.
has these moments where this thing, why would you ever buy the S&P 500 when in 200 days or so, you made a 200% return on Tesla? But then
Yes,
there's
yes.
also times where it goes the opposite. So it's interesting. Like Bitcoin is almost the index, like the S&P 500. Over the long
Mm.
term, that typically does the most consistently reliable. Well, again, that's
Yes,
hindsight
yes.
speaking, but yeah, you get the point.
Exactly. Yeah, yes. Actually, if we look it like that, if on the indices, if you look at the individual stocks, especially tech stocks, they mostly perform very well.
Hmm.
But few of them does that. Like Nvidia also performed very well a few months ago.
Yep.
And yeah, also on cryptos, there are like there are seasons where like silver was performing very well
Hmm.
and the other ones were just consolidating. But the thing is, you just have to understand when is the right time to buy this, when is the whatever. Then you understand that, okay, I will have to catch this momentum maybe
Yeah.
for 3 months. And it just moves like that. Because sometimes, if you look it like that, I think you will always get these good opportunities. You won't only focus on Nasdaq. You won't actually focus only on gold. You
Mm.
will have like a serious basket that you can actually play around. And most likely, if you start to think like that, they are very profitable. You might lose here and there, but at the end of the day, you will start to see things in a different way.
You know what I find interesting, Kenzo, and this is where a little bit of your personal philosophy on markets, and there is many different philosophies that can work within markets,
Hmm.
comes into play, because I'm a person typically that likes to trade momentum. I think you are as well. Like we like to look for
Hmm.
trends. We like to look for things that are working well right now with the
Hmm.
understanding that they might not be working well tomorrow. But like right now, if I look at this market, gold is a momentum machine. But it may
Hmm.
shock some people to think or to see that if we go back to um, here's 2011
Hmm.
to really back to when does it even comes back to 2020. That was almost a decade where if you had bought gold, you made
Hmm.
no return if you just held it. So the reason I bring that up is because, as you pointed out, I like the word that you used, seasons. There are seasons where momentum favors a particular asset class, commodity, etc. And as traders, I mean, look at this. This is another fascinating one.
Hmm.
1996, um, gold was trading around $400 an ounce. Actually, well, let's be completely fair. Look at this. Ready?
Whoa.
1980 until 2007. So this would have been, imagine if you had been the poor soul that bought gold and said, I'm never selling. And it took you 10,000 days to get to break even again, right? So the point is, I think what we're trying to say here, as you've pointed out, is there are seasons where certain things are moving well. And as traders, we probably want to be focused on what is working well right now and put to the side things like this. There's a good chance that everybody listening right now, there will be a period of time like this again in our lives for gold. There will be a time where gold moves sideways to down for a decade. And that's a crazy thing to think about. But as traders, for me personally, Kenzo, I'm not I'm not a value trader. Like, I'm not trying to buy gold as low as possible as a short-term trade. As an investment, maybe. As a short-term trade, I tend to favor momentum rather than trying to buy an all-time low or something like that. What do you think?
Yeah, I also do the same. I don't really. I used to be fixed on stuff like that, where I can say I only trade this, I only trade that. But at the moment, I can easily see, you can point that out easily, that no, this thing is uptrending. It's not like I'm trying to do a new thing. I'm following the trend, and I just try to follow that. As long as I understand the trend and the market that I'm dealing with, most likely, yes, I will just jump in. The other one we never talked about, I think it was last year, a few years, I think last year coming now, it was also coffee. I don't know if you also check coffee. It
Yeah.
was like booming, very nice, because I think there was a sort of shortage, and it was moving very nice. I don't know if maybe now it's stabilizing, but it seems to be still flying. So mostly I try to just think outside the box, because the chart is just the chart. If you understand the chart, most likely it will try to explain the same thing. If the trend is going up, obviously it means something is happening. If it's going down, it means the demand is not, it's not really that much. Also, oil, we can see that oil or whatever, it was going
Oh
down. So
yeah.
most likely we
Talk
can
about
play
oil.
around
Oil
those.
has massive. That's a great point. Oil has massive seasons, right?
Yes, you see, so those are the stuff that if you combine, you might find that they're not even more than 10. So it's those things that you can actually manage very well, and you can still do them at the same time.
Yeah. No, that's, I mean, for listeners, oil, take a look at this. If you had only this as your reference to how oil trades, you'd say, wow, oil just tends to rise. But this is what Kenzo is saying. There are seasons where it's in a downtrend. And I actually love the way that you said that, where you said basically there was a time where you were trying to be way more predictive. And same here, right? There was a time where I was like, I think I can predict where this trend is going to reverse. And I think it's going to, and then you kind of just over the years, for me, I got pretty much humbled by the idea of like, I don't know exactly what the future holds. And I don't, as a trader, I don't need to know the future. I can simply trade the environment that I'm in. And that's a beautiful thing about trading compared to investing. Like if we're thinking about investing, for example, for a second, let's say that you are investing in S&P 500. And let's just say that we get a multiple year downward turn. As a trader might be able to say, oh, I'm either going to get short in this market or I'm going to just stay out of the way. Both of those are choices that traders can do. But investors who do not focus whatsoever on timing, really, they really focus on just buying and holding. Instead, they might buy here and they just have to sit through that period. Now, and many many investors, what they'll do is they'll lump sum invest. They'll put all their money in right here. Some investors will choose to dollar cost average. So they'll buy a little bit, they'll buy more, they'll buy more, they'll buy more, they'll buy more. I personally, as an investor, typically like that. I like to dollar cost. I like to bring my cost basis down over time. But there's different styles. But the point is, traders, right? They have the option. They can choose to say, this market is no longer cooperating with my style, with my strategy. I'm going to either stay out, trade something else, get short, do something about it, right?
Exactly. That is the point. So mostly, this is also the issue that I also have. I don't really like selling like Nasdaqs, US 30s, or
Yep.
S&P. But instead of me going against that, because if I sell, it means I won't have that confidence of holding that much. So I rather check something else that I can actually, like gold, it's now pushing the upside, or
Yes.
maybe other pairs, oil, it's also on a downtrend. That I understand that why it's going this direction. So that way, at least I can't just force trade some stuff just because I want them to go the way I want. I rather focus on a different thing. And if I feel confident buying, I will go back when it's time for it to buy, because I understand that when they buy, they can go crazy, or when they push up, they can actually go crazy. So yeah, I actually do it like that.
Yeah, and I actually, when it comes to trading indices specifically, it is very, very rare for me as well to take a short position on indices, simply because of the nature of what we're talking about. We're talking about stocks that are growing, companies that are growing over time, and that is a upward drift force that causes them to tend to go up. They could go down for a decade, doesn't mean they have to go up every day, but they tend to, over the long term, move higher. So I'm with you on that. If I am bearish on the stock market, instead of taking a short position, I will typically go trade currencies or trade gold or trade oil. I'll just do something different, but I rarely will actually take a short position on the index because it's just a very difficult trade to time. There are people out there who do short indices and do well, but in my experience, in my back testing, I found that to be a very difficult strategy. Now I can short currency pairs, I can short other things, and I've been able to do just fine with that. But shorting indices is a very difficult trade unless you are maybe like short-term day trading or scalping. It's just very hard to predict a longer term down move in indices because they are actually quite rare.
No, that's true. That's true. So yeah, it's that is the thing. Unless if you're scalping, but sometimes scalping, you just poke your emotions, you end up doing some mistakes here and there. So I rather just focus on something quite not really slow, but gold is still very aggressive, but I can actually focus on that because I can understand where it's going.
Sure.
I can also go on oil, all those major instruments. I can just try to check them out. Then I don't really have to force myself. You can also check maybe currency pairs, as you said, or maybe along the way there will be sort of fundamentals that are pushing the market to move that way. So it's not like it's a surprise. Like today, indices are selling because of tariff threat, actually tariff war with the European Union and US. That is understandable. But we know that only one communication might change everything. So you can't
Sure.
just have that confidence to say, I will hold this for longer, because they might update us maybe tomorrow. Things change very
Yeah.
quick.
Yeah.
You see, so, but that might not really happen on oil, that might not really happen on gold. So, which means those are quite stable. They might be aggressive, but they're still stable when there are those geopolitics or any economic event.
Yeah. Makes good sense. Kenzo, I want to thank you as always for coming in on a Friday and sharing some fundamental analysis. We do this every week together. And for listeners, if you enjoyed the commentary from Kenzo, I want to just encourage you to take a second and make sure to go subscribe to his YouTube channel. It's at Extra Hot Forex. You can search him up on YouTube or click the link in the chat that's just been dropped by our producers for you guys to go explore his content, subscribe, join his Telegram channel, all that good stuff. Kenzo, thank you very much for coming on today. I enjoyed the conversation.
Thank you very much, man, and also your viewers.
All right. See you, Kenzo. Also, just to clarify, 24/7 Betterment says he doesn't short indices because Weebull doesn't allow for shorting. So I do trade with Weebull for a lot of my stuff. However, that is not the reason that I don't short indices, because Weebull does allow for shorting on indices. I mentioned that I don't short indices because it doesn't align typically with my strategy. I've done a lot of back testing on it, and I just Shorting just typically is like a break-even approach for what I do, which is just not really worth doing for my style. And also, instead of putting that capital to work shorting or taking that risk shorting, I typically will instead go find something else that I like to trade, currencies, commodities, other things like that. Shorting indices is no joke. It is very difficult to do. It's very difficult to time. If you think about this, the majority of the downside moves that happen are very, very small windows. If you get this right, obviously, like think about this whole movement that we've seen in 1, 2, 3, 4 days. That is the majority by far of the downside move occurred in 4 days. So it's very difficult to try and capture that downside. Your timing for shorting has to be impeccable, has to be really good, because typically it's very rare in indices to get a grind down market over long periods of time. Whereas it's very common to get grind up market moves with quick, sharp moves lower, right? So if you're able to find that move, then you can do really, really well. But I've just found that incredibly difficult to try and time. So I choose not to short indices because I'd rather just trade other things instead. So that's my thoughts there. DAX rejected here, it seemed, this level of support. S&P 500, NASDAQ, at least for now, seemingly holding support. NASDAQ still off a little bit here. If we do get another push lower, NASDAQ looks really interesting to me. Japanese yen is up today, so my yen shorts not looking so hot today. However, I actually might take this as an opportunity to scale into some of my ideas. Actually, NZD-JPY is up today. I don't know how that's happening. NZD-JPY up today, dollar yen down today. If this continues to move lower, I may add a second position to my trade. We'll see. Pound dollar looks real strong, breaking out across those highs here this morning, looking really good on this one. Going to watch to see how the pound plays out. Pound has been just a winner across a lot of different currency crosses. Really impressive. By the way, guys, just a quick plug here before we pass the show over to Chris Pulver. We're doing a free gold VIP membership here in the next few days. If you are not already entered into the giveaway, here's how you can join completely for free. Step 1, join the Telegram channel. We'll drop the link here in the live stream chat as we speak. You can also find it in the description of the video or the live stream. Join the Telegram, step 1. Step 2, simply put your name and email into the hat for a chance to win a free lifetime VIP membership and see every trade that we take inside of the VIP group. So there you go. 2 steps. Join the Telegram, enter your email and name into for the giveaway for a chance to win. We will email the winner next week. Okay. And there's the link in the chat for you in case you need it. Okay, guys, up next, Chris Pulver coming in hot, taking over the show and talking a little bit about this crazy market that we're seeing. Like I said, indices off a little bit here, down 1% for S&P. NASDAQ's down a little bit more than that. Russell took the Russell trade. We'll see how it goes. I've got to stop below today's spike low. If this gets taken out, we move on. I'll watch again for probably my next trade attempt would be on the NASDAQ, but I'll keep an eye on it. All those trades will be updated inside of our VIP group. Again, enter for a chance to win for free. Link is in the chat in the Telegram. All right, up next, Chris Pulver.
Hey everybody, thanks for tuning into today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show.
Whoa. Oh, hey, 30-second countdown. What's up, dude? Good morning, happy Friday. How we doing? So we finally have a bit of a sell-off. I did close out a hedge today. If you are in Pulver alerts, I did a 590 by 580. That's an May 30th put. So 590 was the buy put, 580 was the sell put, paid 380 for it. And right now I closed it out for about 640 to 650 credit. So I'm going to update that one right here. This will be a quick reply on that message. Trade management. Closing the 590 by 580 bear put spread hedge for 650 credit. So entry was 380, closed 650 credit, taking the profit. Let me make sure everybody can see that. Okay, so that's in. Now, what I wanted to look at is I don't mind adding another trade here. If I did a, just a put at 278, if I do a, this actually isn't a bad position. If we're going to fall a little bit lower, if I did like a, 580, like this isn't bad for $100 of income. I have a profit trap here. If we struggle to go higher, I have about a $5 profit trap on top of the credit that I can pull in. This is a little bit better. This is a little bit better. Pull in some more income here in the next 69 days. Let me see if I can go maybe at the money. Let's try like this 75 by 70. So I think I'm going to take this trade. So I'm going to put this in for my margin accounts. It's a little income trade for 117 bucks. Let me go a little bit less here. 150. That's a little bit better. I'm going to try to take this trade for 150. 150. Okay, not filling at 150. Let's try a 140. Mid's 148. I think 145 will fill. 148 not filling. 147. All right, 147 just got filled. So I'm going to be in this trade. 9732. All right, I'll get this all filled up here. Nine one one one. Okay. So I want to make sure these aren't overlapping. So this would be a 575, 571, 485. This would be a 111. There we go. So I just have a naked put. All right. So I'm putting this trade in. I've got a couple more accounts I'd like to put this in on. Okay. So this trade here. Let's go. Got it. Okay. So here's what's happening. I'm in this trade. We got a bit of a bump in IV. So implied volatility has gone up. I look at that as a better opportunity to sell some premium. And what I'm doing here is I'm looking at about $147 of income out to the end of July. And I have a profit trap. So if we're below, here's how this trade works. If we are below, so if we go, it's a 111 trade. So if price is greater than 575 by July, I'll just put 7/31 expiration. Keep the $1.47 credit. If price is less than 571 and still above 485 by the 731 expiration. Keep the $1.47 and keep a $4 profit trap. Okay, so that's how this trade works. It's essentially, I'm basically selling a put on the SPY, but I'm putting in a profit trap as a potential bonus. So that does sacrifice a little bit of the profit, but it also it doesn't make the trade is like delta heavy because I have a bit of a bear trap there. So I mean, if we're higher, great. If we're lower, fine. I wouldn't take any assignment risk until price is below. The probability of profit is quite high. So we've got a 98% chance of profit on the onset. You know, volatility's jumped up a little bit. I don't think we're gonna have like crazy rips. If we have, I mean, look at what did the market respond to this morning? Trump was coming out screaming like we're gonna have a 50% tariff in Europe. Okay, I mean, what's the real tariff? 15%, 12%, 10%? Are there exemptions? It's like it's the same thing we saw before. I almost wonder if the market is going to take this a bit more in stride. Like this is a knee-jerk reaction, but the market's going to take this more in stride. It's like, okay, well, here's the knee-jerk reaction. What's the real deal, right? So anyway, we'll see how it plays out. But because we had a big jump, the IV was like 17, now it's 28. I'm going to take advantage of that a little bit by issuing this trade. So let me get this one issued and posted. And if you like the trade, take the trade. I'm in it. So this is SPY. So it's a 731 expiration. I'm buying the 575 put, selling the 571 put as a profit trap, and then selling the 485 put. So 147 credit. So 111 for income plus profit trap. All right, that trade's in. And I'll put this in Pulver alerts real quick. So this will be under my index trades positions. New trade, SPY, income and profit trap. So I'll build this out for you so you can see it. This is the hedge that I put on. So this is the one that I just closed out. We're trading around what's the price on SPY right now? 578. So 578 is right in here. So realistically, like this is now. Like we go to right now. That 578 is offering about $150 to $200 profit. If you wanted to sit on this over the weekend, I want you to see the difference of coming in because we have a holiday weekend, so no markets on Monday. Come into Tuesday. Look at Tuesday morning opening bell. I just want you to see the difference of how much time works in your favor. If you come into 9 a.m. Tuesday morning, 9:30 when opening bell happens, okay? If we're still trading around 578, which is current price, this trades up about $230. If we flush a little bit lower on the day, then let's say we trade down to 575. Well, now you're up $300. You know, so I mean, just time. I don't have to. I don't intend to hold this trade until Friday next week. You know, I closed it out already for 650, which gives me a net profit of about $270. So initially the trade was $3.80 minus 650, 270. That's my profit on the trade. So I did that on 11 accounts. So that was a quick, almost $3,000 on some hedges. Okay, so that's the trade. Now I'm going to build this one out with you for a 111. So I have a put. I'm going to add in another put. This would be a sell put. Let's go out to July 31st. So this is going to be a buy put at 575. And then a sell put at 571. And then a sell put way down here at 485. There. Okay. So this is today. This is towards expiration. And this is the trade. Everybody see that? So this is the 111. That's where price is at right now. I do have a profit trap. So if price is below 575, all the way down here and staying above 485, that's my profit trap of $4 plus the $1.47 that I pulled in on income. Okay, so the nice thing is if price goes up from here, I just keep the $1.47. If price goes up, I keep the $1.47. If price is less than right here, so less than 571, which is going to be the peak of my profit trap, all the way back down here, but still stays greater than 485. I have the 147 credit plus the $4 profit trap, which gives me 547 bucks. Okay. So I like the trade. And when we have I did this a ton in March, in April. I did a lot of these trades. And from April to May, that little 30-day window, these were closing out for 90% max profit. The premiums were even better because the volatility is so high. But that's what enabled me to get back up to my watermark highs for the year, well before we had the little even before the U.S. China gap. I was still up to some fresh highs. So anyway, I'll take a screenshot of this. This is going in the Pulver alerts. Okay, so that's the trade there. So I'll type this in. So if price is greater than 575 by expiration, keep 147 credit. If price is less than 571 but greater than 485, this offers $1.47 credit and the $4 profit trap. There we go. Okay, so screenshots in, good. SPY's in. Okay, let's do similar. I'm gonna look at something similar on the Qs. I'd like to see the Qs pull back just a tiny bit more, but let me see if the IV jumped up on the Qs, because I might do the same thing here. 28.1. I don't mind doing the same thing here. I don't have a ton of exposure on the QQQ. We have the same expiration out 69 days. So my lows are around 400 bucks, 402. So if I did let's say 505 by 501, another $4 trap here. And then I go down to the 400. This is only if it offers up a decent premium. So I'm getting less credit for that trade, right? I do a profit trap now for $4 and I put in basically a cash secured put at $400. I'm only getting 55 cents for the trade. Now that means that I can't necessarily put the Qs all the way back down below the lows like I can on the SPY. The SPY, I can put it, at the lows. So if I tried the 405, I still, I'd have to really bump this up to pull in income like I just did, I'd have to go 420, which is obviously a little bit higher than the lows. So Qs just don't line up the same way. And I'm okay not taking the trade. It doesn't set up the same way. So all right, I like the trade in the SPY. We'll move on. Let's go currency strength this morning. Dollar weaker. Well, let's see if dollar weaker is heading up into my profit target on euro dollar. Still up about 145 pips. Let's go across the board. Aussie dollar. I really hate to buy this thing right now because it's such a high price. Yeah, I'm literally talking myself out of it as I'm about to talk myself into it. Because, like I said, the Forex market is the last market that I want to say buy the high. It is the worst feeling in the world to buy the high. It is the worst feeling in the world to sell the low. The Forex market is notorious for pullbacks and retracements and efficiencies and pivots and fibs. So I hope we get a pullback. If we don't, it's open space trading. I maybe don't get the trade that I want on Aussie dollar. Let's take a look at Aussie Swiss. I'm still waiting to see how this kind of bottom is forming. Let's go to CAD Swiss. Same thing, kind of looking how the bottom is forming. Euro Swiss, still a little bit messy. Same thing, how bottom is forming. Pound Swiss. If you're hanging on a pound Swiss, as we mentioned here, if you were long pound Swiss, this is what I said. If you buy pound Swiss, take it back to this pocket or this pocket. Those are great profit levels to be protecting. Okay. You had to buy this with the intention of, if I'm buying it here, I've got to be willing to buy it again a little bit lower and buy it again a little bit lower. But the probabilities we're probably still heading up to these levels. So this could be just another pause before we get a push higher, another pause before we go higher, right? Once we get to 113, 114, I would be out of that with some profit. Okay, it still looks okay. I mean, it's still, a valid profit target. Also, you can take it all the way up to the highs if you want to at 115 with a trailing stop loss, but I wouldn't be setting, I wouldn't just be setting my profit target at 1500. I would take the profit in here, and hopefully be able to kind of average back into it. What else? New Zealand Swiss. New Zealand dollar, like I said, this one looked a little bit better if you bought the pullback around 58.60. I didn't. I was waiting to get a pullback in here. Didn't happen. New Zealand Swiss. Still waiting to see if this, has a push up into the 200 moving average. I'm still up some profit. Let's go dollar CAD. Dollar CAD, I'm not that interested. I'm sure some of you may be doing something on dollar CAD. We had this really nice topping pattern here. That was a beautiful swing trade. I would say that's where you got out of the dollar CAD. If you're in dollar CAD, that would have been the best trade. Is take that swing, stop loss above, and then a nice push down to 3,900 or lower. Now that this is like the second part of this trade, maybe we've got to trend back down towards like 32 or 3,300. I'm not chasing dollar CAD, but I will say that if we come back down to these lows and we have some inefficiencies here, then I'm probably going to buy some more at a really low price. Dollar Swiss still hasn't broken the lows yet, but watching, I really want to see if this one just kind of works its way on the right side of the trend line. Where's my bottoming formation here? And do we get back into this cluster? Okay, let's go yen crosses really quickly. Yen, not really that exciting right now. Not really that exciting. Yeah, I'm going to say it's kind of a nothing burger at the moment. Dollar yen is, because of the weaker dollar. Look, this is a key pattern to watch. It could be very noisy around the 140 handle. Okay. I wouldn't be terribly surprised if we come down to 140. Be on the lookout for a potential bear trap. Okay. We come down to the lows, we poke the lows, but we pop right back up and we still stay in a range. Just be on the lookout for that. Okay. If it breaks and goes lower, look, there's a 2,000 pip measurement here. I think we get back to 120. That's an amazing opportunity. It really is. But as long as we don't have a bear trap, as long as this market's making lower highs and lower lows, keep the pressure on this dollar yen. As long as we are lower than 140, keep the pressure on the dollar yen. But to me, this trade really isn't validated to the downside and confirmed unless we get below 140. Okay. But if you sold it up here in the 147, 148, I'd be break even and just celebrate this thing every single day. If it wants to hit 140, maybe trail a stop. If it breaks 140, we really could let loose. The downside, however, is I don't think breaking 140 is going to come with anything good in the stock market. I think if we break 140, we have more risk off trading, and there's probably some more pain ahead. So that's what I'm saying. A bear trap would make a little bit more sense. If we're still going to have equities be resilient, I say we bounce here and we probably head back up into this range. I think this is more of a range. So just if we have a bear trap, be on the lookout for that. If we break below it, then we just have a weaker dollar, which overall could help. And maybe it's moving flows into like Asia dollar / yen. Okay. All right. Covers a lot of currencies there. Let's go heat map for a moment. Let's go mags. Mags at 51. Let me see here, actually. I don't think the IV is going to be good enough on mags to take a trade. I think options are going to be kind of garbage. But if I went out to December and this low is 40 bucks, could I buy? I mean, that's not a bad trade. If I did a ratio spread here, I mean, I could own mags, which is the collective mag 7. It's an income trade. I could own mags at the April lows. I don't think that's terrible, but that also is like, are they all going to survive? I would think they would, It's like, I don't know. I guess it could be a lot of risk, but it's certainly a lot cheaper than like trading Apple and Amazon and Meta and Microsoft and Google and Tesla, all separately, right? I mean, for a little $100 trade, if I owned it here, I could essentially own the Mag 7 basket at the, you know, 2024 August low. We pulled back 30+% here. I mean, it's just funny how this looks a lot like the S&P. It's still a long shot from the highs. I mean, we've got another 14-15% to get to the highs on Mag 7. Anyway, I don't think I'm going to take that trade right now, but I do want to keep an eye on it. I did a synthetic long when we hit these April lows. I did a synthetic long. I bought a call and sold a put at the same strike, and that thing ripped up about I don't know, like $7 or $8. So I took that profit. But now I'm just kind of waiting. This is a big island. Also, one thing that's really nice about the markets right now, take a look at this weekly candle. Okay. We're just kind of sitting right in the middle. If I keep talking more, I'm going to lose my voice. It's been on the cusp each day this week. Here's a weekly candle. Here's a weekly candle. So, we still have this potential gap fill. If you think about this market like a bit of a bungee cord, we jumped off the bridge. We got snapped all the way back up. I do wonder if there's just less and less momentum, right? Like maybe we don't break the lows, maybe we don't break the highs right away, but I'd like to see how this whole area behaves. Are we going to, just kind of hang out here with a bunch of chop? Is this market still going to justify going higher? I'd love to participate in some type of pullback to then get to all-time highs, but the flows are interesting. They really are. Like this market is so I don't know. It's like if we fill that gap, it's like that could be all the market needs. I mean, the Fed is still holding strong, doing their thing. I mean, the talk I've been reading this week is that the Fed would be adjusting their inflation target from 2% to 3%, which hopefully would allow them to show like, hey, look, we are right. Instead of telling the world that we're looking at a 2% inflation target and yet we're 4 years above it, to finally say we're going to adjust our inflation target between 2 and 3%. Well, now they can start, making monetary policy decisions based on a goal that's achieved. So we'll see if that takes place, maybe this year. But at the same time, Republicans, I think it's in the Senate right now, but there's a tax bill, right? The big beautiful tax bill that passed by the House. It was 215 to 214. It was like a 1 vote difference, so it did pass. Senate has a look at it. Senate does have a Republican majority, so it probably will pass. But it's also increasing the deficit. It's a tax for the wealthy. It's going to leave people uninsured in the U.S. Like it has its pros and cons, but I just think it goes right back into the same window of like we're going to spend money, we're going to increase the deficit, we're going to raise the debt ceiling. Um, I I don't know how firm, like I don't know how firm and contentious it is in DC. Right? It's like right now Republicans have the majority. This is the window to do the most change. If they want something to pass, now's the time to do it because if there's enough disappointment, disenfranchisement, then they potentially swing the midterms, which is later this year in November, right? So time will tell. But anyway, we're kind of stuck right in the middle. We have a gap fill, so we're kind of in the gap area right now, right? We're in the gap area. Are we going to come back and fill yesterday's close, or are we going to push down towards this level or this level going into next week? I'd still like to see a bit more of a sell-off if possible. I think even if we do fill this gap, I think it still gets faded, and this market has rolled over a little bit, or at least for a correction. But if we break, that trend line there, and we start clearing back above like 58.50, then the bulls might be right back in charge. Okay, so food for thought. All right, let's go some other top-down stuff here. Let's go gold and silver. So we've got S&P down about 0.9%, NASDAQ down just over 1%, Dow is down 0.7, Russell is around 201. My covered call thoughts working out just fine. I'll still sell more calls. I'll still collect the income. That is IWM, Tesla, MicroStrategy, and even SPY. I'm selling calls in SPY as well. I was looking at, I might actually do this in this. I just got a new account that started. I may end up buying some shares and looking at, I'm going to price this out right now, actually. If I looked at like a 1 day for the SPY, so if I sold here, I don't really want to get in the money. If I sold like a 30 delta, so I get some income there. So if I sell a 30 delta for about $1.50, what's my delta if I wanted to pay for a debit? So what I'm looking at, is there a way that I'm just thinking about this yesterday on a walk. If I did like a 0 to 1 day collar trade, okay, and this is just kind of hypothetical chat here, but I'm going to kind of price this out and figure out if this is a good strategy to make some daily income. So if I buy 100 shares of the SPY as an example, right, and then 0 to 1 days to expiration, I play a collar trade, which is I sell a call at higher price and I buy a put at lower price. My goal would be to somehow produce about 50 to $1 credit per day. I'll say per trade. Okay. And I can just repeat this. Now, it's going to be a lot of management, but I'm going to kind of dedicate like one account to this and see if it would be worth it. So if I wanted to, like 30 delta, it's kind of that one standard deviation move. If I did it, I can generate a few bucks. Let me try to do like it's probably better to assess this like in the mornings. So like Tuesday morning next week for a 0 DT. But if I were to sell this for $1.40, and then I go down to kind of make around 50 bucks, like right there, I could buy a 17 delta put. I could sell a 30 delta call. I can pull in about $40 income. Okay. Now, on top of that, if price goes up, I mean, there's room for gains here. Like if I buy the shares at 577, here's how this trade works. If I buy the shares at 577.40, I collect, let's say 45 cents on this trade. Well, there's my break even. If price goes up to 583, I get it called away at 583. I make $600 today. Okay, that's a great trade. Also, if the market is moving lower, if I note this debit around 95 cents and the price drops today, can I turn a 95-cent debit into like $1, 80, maybe $2 and change of credit? So I think a 1 day expiration might be the way I consider pricing this out. I'm going to experiment on one of my accounts with this. So the nice thing is it's covered either direction, right? Price goes up, I get the appreciation, I get income, right? I have price going up, I get it called away, no big deal. I'll just reset it, do another collar trade. Price goes down, as long as I have at least 1 day expiration, if we have a nasty, nasty down day, that put should grow and swell in price and I could lower my cost basis and I just reposition the collar the next day. So anyway, food for thought, but it struck me, yesterday just on a walk. I'm like, I think I'm going to kind of play, because right now it's like, I don't know if this market's going to keep melting up higher or if we're going to have a pullback. I think it's going to be a noisy spot. Nobody really knows where we're going to go. I think all-time highs are in the cards for 2025. I think we can get there. But in the interim, it's like, I know I can jump into these markets, get my hands a little bit dirty in the trenches and grind. And even if it's like 50 bucks a day, 50 bucks a day, 50 bucks a day, 100 bucks a day. If I do a 1 DT, so I trade it on a Monday, have a 1 DT for Tuesday. Okay. And then for Tuesday, I take it for a Thursday. Thursday, I take it for the next week, Monday, perhaps. Point is if I'm managing the math like aggressively, I think that gives me some income opportunities every, like basically 2 or 3 income opportunities every week. And I'd say on average, if I could generate, 50 to 100 bucks on each one of those trades, making an extra 150 to 200 bucks, 300 bucks a week, you do that over 50 weeks, it adds up a lot, right? So, I mean, I'll just be conservative and say I can make an extra 100 bucks a week. Well, you do that over 52 weeks. That's not bad on just the income side. Now, if price gets called away with a big up move, then I take it and I reset it. But that's churning an extra, basically $52 of improving your price. So if I were to buy the SPY at 577 and through this course, lower my cost basis all the way down to 520, it's effectively doing the same thing. Or just kind of grind. And if we have like a nasty down day, I can turn that, little tiny inexpensive put into something very profitable and then lower my cost basis with it. So anyway, I'll marinate on that over the weekend, but this is something I'm looking to incorporate into some of my accounts just for a bit more of an income churn. Okay. Let's see here. Daniel, there you go, man. I mean, as always, dude, you grind like crazy. Back up now, done. Okay, that's a huge improvement. All right. Okay, so let's see where the market wants to get us by the end of the day. I've got a broken wing butterfly that I'm in for it's a 58.45 pin price. So I'm going to put that in at 58.45 right there. As long as price stays below that today, I'll keep 95 cents. So I set the debit already. It's a 95-cent credit. I set the debit for 10 cents, I believe. Let me double check that here. Yes. So this 95-cent credit is trading for about 35 to 40 cents right now. I'm going to try to let this one go further down, 15 cents, 10 cents on the day. Watching also for another fill on a broken wing, try to get 75 cents for that one. But if price goes lower today, it's fine. We got a pretty good resistance level around 5,800. I'm hoping that we do not fill today's gap at 58.40. That was the close from yesterday. And if we do it and it's creeping up by the end of the day, I will be here end of day. I'll be doing my typical final hour YouTube session, and that's also a potential $5 profit trap. But I love and hate managing trades into the close like that because all it takes is price to do something silly and squeeze up higher, and I only have about a $5 to $9 buffer on being like right or potentially taking on risk. So I don't love that. It would be easier for me to see price do this. If price goes down to fresh lows, then this 95-cent trade is going to be trading for probably 25 cents. So I'm willing to accept a 15-cent today. Grab $80 out of the morning, and I'm good with that. Okay. All right. Let's go some other charts and indexes. Qs, if we get a bigger gap fill, that trade that I took on the 111 this morning, if we get a bigger gap fill on the Qs, I'll probably do the same thing. If we pull back into this area here, okay, I would say between like 486 Qs or like 460 Qs, I'm going to look to see if I can put in a 111 trade that keeps me away from this low and trade the middle here with some income. Okay. I also might even consider dollar cost averaging where, I could do an option trade for some income, but if it comes in and fills this gap, I'll buy maybe $1,000 worth. If it comes a little bit lower, I'll buy $1,000 worth and then see if that, yields a little profit to the upside. And I might increase more. I think this is a good chunk to be like, well, I think we do get to all-time highs. But who knows? I think we'll get there, but you never know. All right, Russell, just going to sell some calls. This one has like the most resistance on the technical side. Volatility index today is up, right? I mean, that's a pretty decent spike. So just on the day, that's a big spike in volatility. It's faded, it's quickly reverting, but it doesn't mean we're going back to fresh lows. Like we might see some elevated volatility here for the next couple of weeks, which is fine. If we have pullbacks, it's okay. I'm actually happy to see some pullbacks. Now, I do wonder if this is causing a pop in the bond market. Okay, so TLT is up a little bit off yesterday's lows. Let's go to ZB for some bond futures. Yeah. I mean, maybe. Let me see here. Let me look at ZB. I might look at if it's cheap enough. If I did something in this would have to be like pretty good asymmetry. If I went out like 60 days and let's, buy the 110. It's a little bit more risk than I want. So I'm risking $2,100 to make $2,800 if I tighten this up a little bit. All right, so we got to go at the money. So that's 1-to-1. That's a little bit more asymmetry. A little bit more. Yeah, I mean, that's better. Maybe that. If I went out, 63 days, do we have a squeeze in the bond market going up 3 handles? I don't know, man. This bond market is kind of a tricky situation. Um, I'm just gonna say no. I'd rather just trade gold, trade silver, trade Bitcoin, use my option levels there versus trying to scalp bonds. I mean, honestly, maybe I'm a little bit more interested in bonds if we come down to these lows. If we come down to these lows here, then sure, maybe a bite in the bond futures. All right, let's go rates and yields. The 10-year yield, was down for a second. Now it's not. It's right back where we started. The 20-year yield. This, by the way, it spiked up above the Liberation Day flinch, right? Post Liberation Day, when this thing spiked up and had that big rip in the bond market, that's what caused the 90-day pause. We're up higher than that. So, I mean, I don't know if this is going to keep grinding higher. It might, be a bit of a fake out trade. I'm not sure. So it's just something to kind of watch. But we are seeing global yields rise, and that ultimately can't be a great thing. Okay, mortgage rates up to like this is I think Fannie Mae yesterday showed like a 6.9. We can go to Mortgage News Daily. 30-year. I mean, we have Mortgage News Daily now showing over 7%. Yikes. So Freddie Mac at 6.86, Fannie Mae around 6.86. Mortgage News Daily, this is the average 30-year over 7% again. Shame, shame, shame. Not cool, man. Let's go China. Nothing crazy here. Alibaba's okay. Baidu had earnings this week. I closed out Baidu for a small loss. I lost like $50 on Baidu. It actually had like a 2.5 times move during earnings, which was not what I planned for. Like, I think 11 out of 15 times it stays within the expected range. I ended up getting the lower probability trade. So I took the higher probability trade, but I got the losing side of it, but only lost $50. So it's fine. Still annoying. I thought we'd have a pretty good trade there. FXI, nothing yet. I still have some shares, looking to see if we get back to highs. JD at 33. I want to sell some more calls on this one to let it get called away. Schwab growth still looking pretty good. Schwab dividend pulling back. Let me go to SCHY. This is the non-US. Yep. So we're back up to 2021 highs on this instrument, but this is that potential, will the world outperform the US? If it does, this is a good way to trade it. Okay, let's look at market breadth, SDFI. No, S5. There it is. So stocks above the 50-day. We had a big reset here. So we were up around 80, almost 81% of stocks above the 50-day, and pull back to now 62%. Go to the how many stocks at the 200 moving average? Well, it was around 55%. It's pulled back. So I mentioned this yesterday in session. Does this mean that the 200 moving average on the broader market is acting as some level of resistance? If it is, then maybe there's some chop in here. Same thing on the NASDAQ 50-day moving average, about 85% of stocks are above. It's fading a little bit. And then on the 200-day, we have 57% of stocks above the 200-day. So I wonder if this works its way back down below that 50% handle, showing yet again like maybe that 200-day moving average is kind of a range trade. Okay, anything here? Pulling back. Let me check Spotify. Gosh darn it, dude. I've got a double broken wing butterfly. I need it to stay below 670. It should be okay. But let me check the expected range really quickly since we had earnings. Spotify here. All right. So I have about a 60% chance that this trade still works out as of now. If price goes down a little bit, this will get hopefully better. The current P&L on Spotify. is I'm down on the call side. I'm up on the put side. So, I mean, I guess I could technically close the put side out for some income here, but then I'm managing the call side with full risk. I still have a potential, $1,000 profit trap here. I just want to see if it stays less than 670 by expiration. So I'm going to have to give that one a little bit more time. Okay. All right. What else do we have today? Anything wild and crazy happening out there? People will be spending, but seeing some drops off these recent highs, it's not a huge surprise. Home Depot, Lowe's, I wouldn't mind picking some of these up if they're discounted. Nike hanging it off those lows, which have some puts on. Walmart defensive enough, but just trying to sell some calls. Let's see here. Johnson & Johnson, looks like UNH. That was another kind of big dramatic stock, hanging out around 296. Closed out that 165 by 170. Now I'm looking to see if it'll stay above 270. I need it to stay above 260 actually. If we get a gap fill here, that'd be pretty nice. Progressive profits there. Palantir. I did a ratio spread on Palantir. I also did a trade on HIMS this week. I'll put this one up by Palantir since those were two of the bigger movers this year. Okay, so HIMS with a bit of a pullback. I put in a trade that, where's it at? Let me go stock options. Yep, so it's it's in my Pulver alert section at 26 by 25 for $1.48. 26 by 25 for $1.48. So as long as HIM stays above this level, it's $150. If it pulls back more, I might do the same thing. I might just sell some puts as well. I might actually do a put combo. Let me take a look at that one. I don't mind owning some shares. Let me take a look. HIMS. If I went out to the end of them, let's go December 19. So the problem here is I look at the strikes. I can't get any more strikes. That's kind of crappy. So that's why I went to January for the trade that I did, because I can go to the strikes that I want. Now, I wouldn't mind something like this if I just wanted to stack up some puts, a 22, 21, and a 20. That's $400 of income, which isn't bad. I mean, it's what is that? That'd be my max risk, but on buying power, that's about 40% on buying power, which isn't terrible. The stock would have to go to zero for me to take really this loss. Probability profit's about 84%, which I think is surprisingly low to go that far, but it just shows it's a volatile stock. IV rank is still 51, so it's a volatile stock. That's why they just throw a bunch of puts in. Ratio spread, okay. I've got a 3/6 ratio spread, so I'm willing to still own 300 shares, but I've got a profit trap to help lower the cost. So I'll be watching those since they're kind of high flyers and high volatility. Carvana, I'm staying out of this one. Whatever. I sold a couple of cars in back in the day on Carvana. It was actually kind of cool. I bought the shares when it was, probably looking like this company is never going to amount to anything. But the head and shoulder symmetry was all I took it to. So unfortunately, I didn't get the the 1,000+% runner. That was, just insane, right? That's it. O'Reilly, choppy, Redfin, Zillow, anything real estate wise. Let me check some home builders. Yeah, I think home builders pull back a little bit more. I hope that they do actually. Lennar, Toll Brothers, and then DHI. These are all major home builders in the U.S. Uber, bit of a pullback. Took profit on that ratio spread. Lyft. See if we can get a Lyft to jump up here towards $18, $19. And then currency-wise, again, just real quick on the currency strength. Here's today's price action. So New Zealand up, Japanese yen back to baseline. Swiss has been in the middle. It's everything is pretty quiet, and the dollar just got a lot weaker from around 8 p.m. last night all the way to current. Dollar's just weaker. So again, dollar index. Just saying, I wouldn't be surprised if we retest the lows. Okay, but it's a potential bear trap in the making. If we go lower on the dollar, watch out for a bear trap because I can see us pulling back again. Okay. I think there's some levels to fade. You want to fade the dollar, small areas, or obviously wait for confirmation. Bigger picture, I mean, I don't know. I don't know if this is the the time is now. It's like the dollar reign is over. But I look, this is one thing you need to think about. There's clearly an emotional move away from the dollar right now, where it's like, nobody likes how the U.S. is treating the world. We're putting on tariffs, so we're bullying the world right now and flexing our muscles. And it's like, you want to do business with the U.S. Here, you do it. Here's how you do it. Pay us, right? It's like if we're the the Costco of the world, you've got to now pay a membership fee to do business with us. Okay, fine. How that's being rolled out has probably not been the smoothest. But I don't know what the alternative is. I mean, is everybody going to line up and say, okay, Eurozone, you're next. No more dollar. Everything's about the Eurozone. I mean, the Eurozone has never been thought of as like a safe haven, right? It's a Eurozone that's trying not to break up. Germany's footed the bill for most of the last 20 years. UK is split. I mean, UK is now separate, but I mean, I don't see the world backing up behind China. I don't think the world is going to back up behind just a currency, especially not a fiat currency. So, I mean, the alternative might be some type of parallel system where you have, dollar denominated assets that are starting to migrate into, commodity based assets. Maybe things are going to get priced in gold. Maybe things get priced in oil. I'm not really sure, but that would, to me, seem the most logical. It's just, I don't think that happens overnight. So, but my point is, is the dollar just going to get smashed all the way down to 90? Well, here's an easy way to tell. If we hit symmetry, okay, if we go down here to symmetry and we have a bit of a pullback here, this past support to become resistance again, that would be a good trade to me. So if we can sell resistance, target support, high, low, lower high, lower low, lower high, lower low, to me, I can get around that trade. That makes sense? So, I mean, we still have a technical setup on like, yeah, I can see the dollar coming into the low 90s, but I don't really want to trade the bottom. I don't want to trade at the lows right now. My way to express that, like I said, I'm long euro dollar. If we hit 1500, that's great. 1550, that's great. But then I think we have some noise around this handle. If we stay below the 102 handle, I think this continues to be like pressure mounts on the dollar, lower highs and lower lows, potentially coming back into this 90 handle. But the good thing is there's lots of time and there's lots of opportunity with confirmation to focus on that trade. If the dollar yen breaks 140, there's lots of time. There's lots of abilities to focus on that trade dropping from 140 down to 120. Okay. So it just doesn't have to be like, I need to trade it now. It's like, this might take months to set up. This might give you a lot of good opportunities just to wait it out. But anyway, just be aware of the big levels. Okay. All right. So we did gold. Actually, we didn't do gold. Here's gold today. Gold. I mean, come on, dude. That's it. A 50 period moving average. Well, maybe this still holds. If it doesn't, I mean, I still like the bar count. I still think this is maybe a range. Here's what I like. Here's what I'd like to see on gold. If we hit this resistance and we fall back down, okay, fine. If the markets drop a little bit, gold becomes more of that safe haven bid. I'd like to see another pullback. Okay, where to? Anything in here as these moving averages catch up, I would say I'm willing to position for my GLD position, maybe even a 111 in gold futures. Okay, I don't mind that trade. I still like silver better, but I can't justify buying gold at these highs. I know we can still go higher, right? I know we could capitulate more. I mean, maybe we'll get to 3,800. Maybe do that before we hit the 200 moving average. I'd like to have a chance to buy low and then take it up to that level. Silver, if we get back above 35, I did put on some trades this week. I bought some silver. I put a buy limit in here, and I put in a buy limit here. So I bought it at market, and if we break the highs, I think we got a lot of upside. If we get a level 2 that I'm interested in, so level 1, level 2, level 3, So I like silver a lot. It's just this isn't the trade where I buy it here, stop out. It's like I'm going to say invest, invest, invest. And bigger picture is $45 to $50 silver. That's my big target. Let's see if we get there. Okay, Bitcoin due for a pullback. I hope we get one. We did poke the highs. It's encouraging, but a little pullback, a little bit of this backfill, or even this backfill, but a dollar cost average into a little bit more. Okay, so we'll watch. If we break and go to all-time highs, I mean, or we keep pushing higher. Okay, I still think we get pullbacks in this area just based on the technical inefficiencies, right? This was the last big inefficiency we had on Bitcoin, and it found it. So I see this one and I see this one as the same thing. I'd rather find them now and go higher from there versus go higher first and then come back in and find them later. And then we just have like a big trend, right? With like deep pullbacks. So just say, I don't know, just keep an eye on it. So I'm not chasing highs on Bitcoin, but I'm holding from all these levels back here. Still holding Bitcoin. When IBIT came into the mix, added some exposure, and I've got projected levels around 130. I think momentum and kind of the rally could get us to 145 to 150. The next big level for me is about that 130 to 150 zone. Okay, if we can accumulate more, that'd be nice. All right. Any other charts? Any questions? Any requests before my voice is gone? We did a little bit of everything top down. So currency wise, watching the dollar, watching the yens. I still like my Aussie CAD, New Zealand CAD. I'm still holding my Swiss crosses. Watch that 140 floor on the dollar yen. Stock wise today, we are in the middle between two gaps, right? We have the US China trade gap right in here. And we have today's, gap to the upside if we're going to fill, but I would hope it just kind of stays in the middle, right? We stay in the middle. And then next week on Monday, do we break and go lower? Do we try to fill this gap? I think the bears might have a bit more control. I mean, unless all of a sudden there's a complete flip-flop of today it's 50% tariffs on Eurozone, and then Monday's a holiday, Tuesday is, it's going to be like 15%. I mean, again, I also think that if we keep doing that, I think we start losing a lot more credibility, because then nobody's going to believe it, right? We say 50%, but in truth, it's like, oh, what's the real number? And it just keeps being modified until it's like, do a deal with us. So I don't know. But obviously we haven't seen a lot of tariff drama, and then today it just came out again swinging. So it's not going away. Dollar CAD, that's a request from JRC. Yeah, I don't have a trade. I mean, dollar CAD, if you're liking the short, this isn't a bad spot with a stop above that swing high. Not my personal spot though. I'd rather wait for this to come back down to these lows and then look to average back in. I want to buy low around 33 to 3,000 and, take it back to the halfway point, or maybe back up to these highs. So if that's the trade I get on dollar CAD, that's what I'd wait for. I'd buy it nice and low, look for a bottoming pattern, and take it back to this. This is just very consistent resistance around like 38, 3,900. So if I could buy it at 33, 32, 31, and 3,000, take it all the way back to 3,800, that's another position trade. That's what we did here, right? Bought it here, tested resistance, and then stacked up buy stop levels as it broke and went higher. So if I can buy low, I'll stack up trades into that resistance and try to make that into a big trade as well. Hope that helps. Okay, so I think that's going to do it for me today. Let's do this again next week. Enjoy the weekend. No markets on Monday with Memorial Day. I'll be in Chicago this weekend, so be back hopefully Sunday night if I can find a flight, or Monday. And have a fantastic weekend, everybody. All right. Thanks. Bye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.